Well, we are seeing interest rates fairly flat for this week, and there's a reason for that. It's next week. We're going to be seeing a lot of market movers next week potentially. So let's walk through what the calendar looks like next week after a quick review of the numbers. Won't be a long video today because, frankly, this week's been pretty boring from an interest rate perspective. But next week has a risk of a lot of volatility and maybe some things that are going to help us significantly with regard to rates. So, market's going to move one way or the other, y'all. First quarter GDP comes out on Wednesday. A lot of folks are predicting, y'all, that we're going to have a really soft quarter economically, measuring the Q1 of this year. It's going to be interesting to see how the Fed responds to that. We've already got some voting members, like Chairman Waller, that has come out and said he expects to see weakness in this report, and if so, the Fed may be more aggressive. Again, he's just one voting member, but when you hear them making public statements like that, they're not done in a vacuum. So that may carry some weight to it. Personal consumption expenditures also comes out on Wednesday. Again, that is the Fed's favorite read on inflation. It's likely that we're going to see a lot of movement around that report. A lot of folks are anticipating it because that may actually reflect some of the initial pricing pressure placed by tariffs might be included to a certain degree in that number. It's going to be interesting to see how that plays out. If it falls short of an expectation of it coming in a little bit strong, or if it is flat, you can expect the markets to rally around that. And then on Friday, we have the big one with regard to jobs. First Friday of every month, of course, we get the BLS jobs numbers. If they show weakness, in addition to potential weakness for Q1 GDP, those two things together could move the market significantly, y'all. So we're going to keep an eye on it closely. The numbers for this week with the current pricing, Mortgage News Daily has a 30-year fixed rate conforming loan today at 6.92. We were at 6.87 a week ago, so we're up a little bit, fairly flat. And then we were at 680 a month ago in that same national average. So not a lot of movement this month, except a slight trend higher over the last 3 weeks or so as the markets have grappled with what the future is going to hold. Next week, we get a lot of data that's going to answer a lot of those questions, at least in the short term. I'll be back to report on all of it. We will talk to you again next week unless something happens between now and then that warrants another video. Stay blessed, stay safe, have a great weekend, and we'll talk to you next week.